So as you can see here, there's no denying volatility is out of control in the stock market right now. VIX here, which is the volatility index, otherwise known by some people as the fear index, pretty much is telling you how volatile the market is right now. And again, there's a lot going on, a lot of reasons for it. I think a lot of people have suspected there's chance of pretty negative reaction to the stock market, but again, look, the S&P 500, it's had it's been up and down. Year to date, though, still up 17.91%, but as of today, you see a massive dip of anything really over 1 or 1.5. It's a pretty big movement as far as an index is concerned for a day. So that's kind of where you see this. There's a lot of other reasons why you might see a boost in this volatility index. Well, for one, the S&P 500 PE ratio still at pretty well near historical highs. We're talking about matching that of the dot-com bubble, the 2008 financial crisis. It's levels that are really, they haven't seen in quite a while. You see where typically the trend is sitting around, typically a high around 25, and now we're sitting at a 34 P ratio. So again, the market's trading very high. We've got terrible news as far as the Chinese economy is concerned as of late, where they're having a big nightmare of debt, a huge debt nightmare, specifically due to their real estate industry. Crazy stuff. Again, the Chinese real estate company could default on $300 billion worth of debt. So definitely there's some issues going on right now. And obviously we still have the lingering COVID fear out there, as everyone still seems to worry about that at times. So there's a lot of reasons for this volatility to really be boosting right now. And I just want to tell you what my opinions are and how I feel about it. So I think I've pretty well gone and stated this many times. Volatility is not something I'm personally afraid of. There's a lot of reasons. And you can look historically. I mean, look at what it's done to my portfolios. And we see pretty bad monthly performances. I mean, obviously, mashed in the M1 Finance portfolio and on the Robinhood portfolio, if it ever loads, we're down, 2.7% in the last month. So the portfolios have been hit pretty hard. I mean, we're talking about going from 36,000 down to 34 within a little bit of time. I mean, less than a month's period. So the market's volatile, and I think I'm okay with that. And there's a lot of reasons for that. So as I've said before, it is better to be in the market than not to be in the market. And when opportunities arise, you should take advantage of them. A great example of this is a quote by Mr. Warren Buffett here, obviously one of the greatest investors of all time, simply stating, be fearful when others are greedy and greedy when others are fearful. So when people are buying the heck out of the market, maybe there's not as many options out there, right? So maybe you should be fearful at that point. But when others are fearful, you should be greedy. When they're selling off the market like crazy, that's your opportunity to buy, and you should take advantage of it. That's kind of what I've always thought about, and I've been waiting for a decent buy-in period for a little bit. And I don't think we're quite there, and I don't think we're necessarily on the brink of collapse. I think the Chinese economy is in for a hurting, and that hurts the global economy, all things considered. But again, the S&P 500 is still up 17.91% year to date. If it were to fall to the point of 20%, I mean, that wouldn't be much of a huge dip when you consider the market was up last year. In the middle of a crisis, the market was up, and it's still up even further this year. If you look at historical performance of the S&P 500, there have been incredible gains consistently. I see a lot more green than I do red in here, and that's why I'm not concerned about having my money in the market. You look historically over the lifespan of the S&P 500, and you just see, for the most part, it's kind of going up. I mean, there are a few times in which you don't see the market going up. You see a few things here, the dot-com bubble, how it was a terrible 2-year period for the S&P 500, and then guess what? After that, it went on a massive run. Then the 2008 financial crisis, where stocks dipped massively, and since then, the thing's up 500% in the span of 10 years. I mean, that's just massive stuff. So I'm not afraid to have my money in the market, and I like to take advantage of these situations. And my particular strategy kind of helps me. I'm a guy who's a little bit more focused on dividends and something. Again, you see a market loss here of $325, all things considered, in terms of the positions for the month. But I've made $57 in dividends in the last month as well. From the Robinhood standpoint, it's the same premise. In my Robinhood portfolio, I have an annual income here of over $1,000 now, right? That's nice. Dividend yield right at 3%. So regardless of what the market does, I personally am still earning a nice chunk of income just in dividends alone. So the stocks I hold are not ones I typically plan on selling. These are companies that I've looked at and I want to hold long term. So for that reason, I'm holding them and I'm still earning the dividend on them. So I'm not losing any of that capital gain because I'm not selling. I'm not selling these stocks. I'm holding on to them. And I like it a lot. Even if the market were to go down, I'm still making 3% on the year just due to the yield. Frankly, if you look actually, the yield on cost is what's more important, 4.8%, because that includes purchases prior to stock appreciation. So consider that. Annual income here of over $1,000. It makes me happy. I just crossed that line not too long ago, and I'm pretty excited about it. So the M1 Finance is getting there as well. You see this $28,000 portfolio yielding right around 3% as well. So again, we'll get there at some point. That's my main thing here. The market may be volatile, but I'm staying the course. I'm going to continue my investment strategy because that's how you achieve your goals in life. If you have goals for saving in life, mine simply, as stated here, I'd like $1 million in this account by age 40. Through all calculations with how much I'm contributing weekly, as well as other income that comes my way, and dividend income, I should be able to get this portfolio, if you look at historical performance, I should be able to get this portfolio to $1 million by the time I'm age 40. The Robinhood as well. Both of them should be $1 million portfolios by the time I am age 40, and that's what really excites me. So, while others may be fearful, I think it is time that you really need to keep a level head regardless. And if things were to happen and the market were to see a big dip, that's when you take advantage. That's why it's always good to have money on the sideline. You don't want to have your entire income based off of in stocks right now. You don't. You need to have some on the sideline. For me, I have around 50% of my wealth in the market right now. Now, the additional 50% I have right now is kind of just sitting in the bank. So when there are opportunities that arise, that is when I start to invest that more. That's what I think people should do, frankly, in terms of their own personal performance too. I think that's what you should do. You need to have some money set aside for when those occasions occur, because then the response from then is even nicer, right? If you look, let's just look the past 5 years, and obviously you see the reaction. If you would have bought the dip here in 2020, you would have seen 88% return solely if you just invested in a ETF to track the S&P 500. So if you invested in SPY, in a matter of a year, you've just doubled your money because you bought during this dip period. So that is why it's good to have money on the sideline. Instead, if you held it, it doesn't hurt as well. If you just held through it, you made 30%. I mean, let's be honest, 90% better than 30, but it's still green, all things considered. That's what I got for you today. I hope you enjoyed this one, and you have a great day.